Good morning, everyone. Welcome to the Macro Snapshot. We are Monday, August the 11th, 2025, recording this in the morning. Okay, so the main thing we've got this week, it's right in the middle of summer. So, lower liquidity, markets are moving around on less sort of input, so to speak. But what we do have tomorrow, which is very interesting, is going to be the CPI. So let's keep an eye out for that. I'll talk about that tomorrow morning. But that's really the highlight of the week is going to be the CPI. What we do have overnight is the interest rate decision in Australia. They're expected to cut. I'll talk about that in a second. But as you can see from the calendar here, pretty quiet calendar, not really much happening at all. What is going to happen at the end of the week, in theory, is that Putin is going to be meeting with Trump in Alaska, some sort of attempt to hammer out a deal for a ceasefire or an end to the Ukraine war. Of course, the elephant in the room is that Zelensky of Ukraine hasn't been invited as yet, nor has Europe. So I don't know how much validity that meeting will be, apart from some kind of sort of spectacle. We shall see. But in the meantime, that has provided a little bit of sort of input into the oil markets and the just providing a little bit of risk on. Okay, so if we just look and see what's going on over the weekend as well, we also had the FOMC voter. We had Michelle Bowman. She was one of the dissenters. And basically, just looking at the VIX here, you see how low the VIX is. She basically said that, her view was that, probably 3 cuts would be appropriate by the FOMC by the end of this year. So 3 cuts would be appropriate. She is a voter. We also have the sort of nomination for Stephen Miran, who, of course, is one of Trump's closest economic advisors. He hasn't been confirmed yet, but presumably he'll be confirmed sooner rather than later. And so we could have a situation that we'll have three, I don't want to say dissenters, but let's say three sort of very dovish people on the FOMC before the next meeting, which will be Michelle Bowman, who, as we saw, just called for 3 cuts. We have Stephen Miran, who's a great Trump loyalist and definitely is a dove. And also we have Christopher Waller, who was a dissenter at the last meeting and, of course, is still in the running to become the Fed chair in 2026. So definitely we're getting towards a situation where the Fed is becoming a little more pro-cut. And one could even say that there's even some internal divisions sort of building. But again, that's going to be probably a question for the next few weeks going forward. In terms of other stuff, let's just look and see where the markets are. So we see the ES had a pretty strong sort of move up last Friday, and any talk about the jobs number, which was here on Friday, the 1st of August, you can see that was quickly bought. At this point, we're above all of the moving averages. All of the moving averages, the EMAs here, are pointing upwards. So you've got to say that stocks at this point are looking quite strong. There is some people are talking about the breadth, and it is true that, let's say, if we look at something like the RSP, which is the equal weight, so every stock is given 0.2% here. For sure, this is underperforming the big tech stocks. And you can see there's something like the Mag 7 here. You see the Mag 7's making new all-time highs. So the question here is this like a very narrow kind of rally? Is this a problem? But it was interesting. I was reading some research over the weekend, something on Bloomberg, and essentially making the point that if you look at the Mag 7s, another way of looking at that is to say that these are voracious companies which have actually bought up, I think the number was about another 60 or 70 major companies over the last few years. So, for example, you have companies like Snap, you have like WhatsApp, you have YouTube. These are all companies which, had they remained separate, would be large companies, but they are now all under the umbrella of the Mag 7. They belong to Meta or Google or Apple or Tesla. All of these large Mag 7s have made a lot of acquisitions. What's the point? The point is that rather than just saying, oh, it's only these 6 or 7 companies, if you actually sort of factor in their acquisitions of other successful companies over the last, let's say, 5 to 10 years, you could argue that actually, a lot of this growth is more like maybe 50 to 70 companies. And therefore, one could argue that the breadth is a little wider than we think. So it's a bit of an interesting point there. I don't know how valid it is, but just I just maybe sort of think a little bit, because there's a lot of doomsayers saying that, oh, this rally doesn't have any legs because it's very, very narrow and it's only 6 or 7 or 8 companies. But my point is that if you actually look at these top companies, they are actually made up of a lot of very successful smaller companies which they have acquired. And so, as I say, you could actually argue that, there's breadth is a little wider at the top. But nonetheless, we do see the Mag 7s outperforming, let's say, the so-called equal weight, as I say. What is interesting, if you look at the Nasdaq, which we'll look at here. It's almost at all-time highs here. And we got the curious information over the weekend that apparently Nvidia and AMD have agreed, sort of in exchange with the Trump administration, for being able to export their very their high performance chips to China. Apparently they have agreed to a 15%, almost like an export tax, paying the US government a 15% export tax, which is some sort of kind of levy. So that's interesting. And we see in pre-market, I think Nvidia and AMD are down a little bit. So that's something to be looking out for today, is just to see the performance of Nvidia and AMD, and also in the broader sort of relationship to the Nasdaq, obviously, just on the fact that it almost seems like a quo pro, some kind of agreement between the Trump administration and these two large chip manufacturers to pay this export tax. So that's an interesting way of doing business, and let's keep an eye on that. And could that be something which will weigh down the indices today? Other things to be looking at is, so in general, there seems to be also over in Europe, if we look at the stock 600, you can see not as strong as the US markets, but still, it's come off those highs from the last few days and sort of pushing up a little bit. Could that be a little bit of a boost of sentiment if, there is some kind of a Trump Putin accord, something happening in Ukraine? I don't know that's going to be such a huge issue, but, nonetheless, that's possibly a little bit of positivity. So in general, we're seeing global indices pretty strong. What is interesting, if you're looking at the bonds, and just looking at the US bonds, you can see here at the front end, excuse me, I'll grab some tea. You can see here that the front end, this is the 2-year price, has come down a little bit, but that's just like a fib retracement. And to be honest, with the strong economy and the fact that we did have this huge, 20, 25 basis point move on the back of the jobs data, that to me would be sort of reasonable, a bit of profit taking there. But of course, we do have the CPI tomorrow, and that's going to be a fairly, I would say, binary event. Well, I don't know how binary, because we're expecting about a 3% headline number. So that's interesting. If that comes in hot, that could definitely sort of retrace quite substantially. On the other hand, if that comes in a little lower than expected, we could start pushing up towards the highs again. But basically, we see all across the bond space in the US, we see that yields have gone up and prices have come down a little bit. And I don't know how much to read into that at the moment, because as I say, I think there's a little bit of profit taking and just a bit of consolidation as we go into the CPI numbers. But definitely what we can see is that the long end of the curve does remain pretty heavy still, and is trading still with an eye on issuance and the fact that inflation hasn't been completely sort of conquered at this point. If we look at oil, we're up a little bit today, 28 cents or 44 basis points. Still not a lot. I mean, what I was expecting was some of these sort of stops to be run, and we are getting that. We're well below the moving averages here. This is still a weak chart. You can see that if we look at a big sort of Fibonacci retracement going, let's say, from the beginning of May all the way up into the Iran-Israel kind of spike, you can see that we're underneath the 68% fib retracement now. We're underneath all the moving averages. We've broken some stops. So even though today we have a tiny bit of a sort of a bounce, this is still a very weak sort of a chart. Now, again, this is not to say that this is going to collapse more, because I do believe that the global economy is rolling along in a relatively robust way. So what are some of the negatives here? Some of the negatives, you could say that if there is going to be some kind of accord on Ukraine, then there won't be any sort of sanctions on Russia or buyers of Russian oil, on China, or specifically on India. And you could argue that that is a little bit of a negative. But as I say, I think down here, early 60s, that's a reasonable price for WTI. And also, you have to ask yourself whether Trump wants that down any lower, because any lower than this, if we get into the 50s, that really starts to create quite a lot of pain for the US-based sort of oil industry, the domestic oil producers here. So let's just keep an eye on this. And if we just break this down into, let's say, a 4-hour chart, just a little bit more granular, as people like to say, if we look at, let me just bring here like a fib. Where's my fibs? Sorry, guys, a lot of stuff on the. Hold on, my fibs. Right. Okay. My apologies for that delay. If you go here on the 4 hour chart, you can see here that this rally is nothing at all. So if you go all the way from the Iran Israel kind of kerfuffle, you can see that we haven't even made any kind of retracement. If we go a little bit sort of shorter term and use a shorter term fib here, you can see that if we go into this one down here, which is most recent, you can see we're just getting up towards the 38% fib retrace here. So in terms of the bulls and a bounce, like the minimum, they would have to start, chewing their way through these fib retracements here. You've got a 20 period moving average here on the 4 hour. So they have to chew through that, the 38% fib retrace, the 50% fib retrace. And I wouldn't call this sort of at all a bullish sort of chart until and unless we could get at least above this sort of fib level here, which would be about 65 or so, which would coincide also with the 50 period EMA. So we've still got quite a lot of work to do in terms of the bulls. At this point, I think it's fairly neutral. I don't know that it's a raging buy. You'd want to see more price confirmation, but it has come down quite a lot. And as I say, if the global economy is sort of stabilizing, there's no reason why this shouldn't find a few sort of dip buys at this point. If we move on to the US dollar, you can see that this is a weird tick. So let's just look at that. The US dollar is still under pressure. All the moving averages are still moving down, although I have to say that the shorter term ones, like the 20 EMAs, are definitely sort of consolidating. So is this a basing formation? It's interesting. Maybe the CPI will give us a bit of information about the next direction of the move, because you could argue this both ways and say that the longer term trend is still downwards, but definitely you could also say that we're starting to see higher lows here. You see the lows are higher, so higher lows. So another way of looking at this from a technical perspective is to say that it could be forming some kind of consolidation or basing formation, and therefore maybe the lows are in at the moment. And if we look at some of the cross currencies, which we'll look at here, so you see the euro. Again, similar kind of situation here on the euro is showing a little bit of weakness. We see the US dollar is up against the Swiss franc. We know that Switzerland has its own issues with the 39% sort of tariffs and whatnot. So definitely that looks like a sort of a strongest kind of basing formation for the US dollar versus the Swiss franc. And it wouldn't surprise me as well if the Swiss National Bank doesn't mind, with the tariffs, heavy tariffs being imposed, if they allow the Swiss franc to weaken a little bit. That might just help their exports a little bit. So I don't think the Swiss National Bank will be intervening in their currency market to support the Swiss franc anytime soon. So we could see some further appreciation here of the US dollar, at least against the Swiss franc. If we see against the pound, we see that the pound had been quite strong just in the back of that sort of hawkish cut from the Bank of England last week. We know that was more or less a split decision with fairly hawkish commentary. We have some data from the UK coming up tomorrow, I believe, quite a lot of economic data. So we'll see which way the pound goes. But maybe the pound's sort of little sort of bounce here, maybe that's a little bit overdone, just as I say, on that hawkish rhetoric from the BOE. The data tomorrow will give us more information about the British economy, and that could be sort of, if that's weak, that could be an excuse for some of those pound bulls to kind of sell and take some profits. Not a huge amount happening in Japan and the US dollar, but we do see the US dollar here, just a little sideways consolidation here. Pretty important technically. You can see here this fat line is the 200-day EMA. If that breaks out, there could be quite a lot more upside. Again, the CPI tomorrow, if we get that number hotter than expected, that could cause a little bit of an upside breakout in the US dollar. Let's keep an eye on that. The Aussie, let's have a talk about the Aussie here. But before I do that, let's just look at, I've got a few charts here, which I have to say courtesy of Bob Elliott and others, but we've got just some charts on where the Australian economy is here. Now, keep in mind that what is expected from the I was just looking on the Bloomberg the terminal. What is priced in to the market is a full cut is priced in. So actually 27 basis points as we speak this morning. So technically even more than 125 basis point cut is fully priced. And it looks as though the RBA is cutting every second meeting. They skipped last time. But so let's just have a quick overlook and just see where the Aussie economy is. And so they are cutting, but if you look at the Aussie economy, it has had some pockets of weakness, but does seem to be sort of coming out of it a little bit. So let's grab some more tea. So if we do a quick overview, you can see that the composite PMIs, they had been a little bit weak, but just starting to tick up a little bit. And that's on the back of, you see the household spending and retail sales. So you see the retail sales is actually sort of pointing upwards. And you can see that household spending is also sort of pointing upwards. So it looks as though the consumer in Australia is doing relatively well. It's relatively solid. And you can see that the percentage change over a year ago, both retail sales and household spending has been a little bit flat, but is definitely sort of pointing in the right direction. So that's a positive sign. Now, on the other hand, one of the reasons that the Reserve Bank, had cut a few times, you can see that the GDP over let's say the last 6 quarters or so, it has been a little bit on the low side. And so definitely it's below, sort of a typical sort of robust growth. The penultimate reading was relatively good, but you can see that, overall the GDP number is not great, and that's maybe one of the factors leading to the RBA to sort of, continue to cut a little bit. Now, if you look at the employment change, that's also been a little bit sort of topsy-turvy, sort of up and down. You see some of these recent readings have been fairly weak. So that's also another reason. So you see that, the economy itself seems to be doing okay, but the employment situation is not perfect and is definitely not sort of trending in a strong upwards trend. It's quite sort of a noisy number. We then have average hourly rates of pay. That's also trending up a little bit, but had been going down. So that's, putting some downward pressure on inflation. If you look at the unemployment rate, it is ticking up a little bit. So again, I think one of the main reasons that the RBA, does still consider cutting, even though inflation is not at target, is just because the unemployment rate is continuing to tick up. It's not horrible. And if you look in a historical context, this is actually sort of very good. Similar situation to the US, but it's not as good as it has been for the last 2 or 3 years. And so that's something to keep an eye on here. And just to continue on here, if you look at the inflation rate, the problem here, though, is that inflation, although it's come down like ever in the world and also in the US, you can see here that the trim mean is what the RBA likes to look at, which is this the gray line here. And the inflation rate, although it has come down, it's still actually above target, which of course is, between, around about 2.5%. So it's still a little bit hot. So the point is that the economy is actually doing okay. And inflation, you can argue, is a little bit above target, but not at all sort of troublesome, really. And you can also say that, unemployment rate and unemployment, although it's worsening a little bit from any kind of sort of historical perspective, again, just to look at the unemployment rate, which I think is this one. Where's the unemployment rate? Unemployment rate, you can still see historically it's pretty good. So that's an interesting one, just thinking about the Australian dollar, because if you actually sort of step back and look at the Aussie economy, one could argue that it's actually in not a bad space. It's getting some cuts from the RBA. Employment is relatively robust. Inflation is sort of okay. There's been a bit of a detente recently with sort of China in terms of trade tensions, and one could argue that Australia seems to have avoided most of the nasty tariffs with the US. So again, looking at the US, sort of the Aussie dollar versus the US dollar here, trading at about 65 cents. And if we actually just zoom out a little bit and put a bit of perspective, let's say on a weekly chart, which I shall do, you can see that it's at a relatively sort of weak level. And it has been down to, as low as 50 cents if you go all the way back, of course, to COVID, but you go into the great financial crisis, it was around, and even I remember going back in time, I think around early 2000s, if my memory doesn't fail me. Yeah, so you go to early 2000s, it got down to 55 cents. So it can go lower, but what we're seeing is that the Aussie is trading, towards the low end of its historical range against the US dollar. And the point here is that, if the economy continues to perform relatively well. The trade with China continues to avoid too many geopolitical tensions, and so on. We could see that the Aussie dollar maybe just consolidating here, but if it could push a little bit higher over the medium term, maybe into the late 60s or even up to 70. We shall see how all that goes. Anyway, let's keep an eye on the statement tonight. As I say, fully expected by the markets to cut. So that wouldn't be a surprise. So we have to look at the statement and just see the ongoing forecast for employment and specifically inflation from the RBA, see what else is going on. Just finally, guys, just want to have a quick look at gold. We all know what happened last week with the gold. And we look at the futures here. You can see there was a spike in the futures price. Now, again, as I was saying last week, this wasn't echoed by the spot price. So you see the spot price, which a lot of that's will set globally, but in London it has a lot to do with that. You can see that gold actually never did spike high. That spike high in the futures was, of course, was an arbitrage thing. The idea that the Trump administration was actually going to put sort of a tariff tax on 1 kilogram and 100-ounce bars. And that's actually what is the deliverable at the COMEX exchange. And so there was a huge kind of sort of premium put on the price of gold as traded on the New York sort of COMEX exchange. But of course, the Trump administration has subsequently come out and said that that was an error, and actually there wouldn't be any sort of tariff, and therefore all of that has been rewound very quickly. So not only has the kind of tariff on gold bars been rewound, and that never actually was the case on the spot price. It was purely a futures kind of technical issue here. But what we can see is that gold this morning has come off quite a lot. And so there's a bit of sort of risk sentiment building, maybe also a bit of geopolitical risk coming out on the fact that Trump and Putin are moving towards some kind of accord, potentially in Alaska later this year, and also potentially also signaling a strengthening US dollar. So let's see what gold has to say to us. That's an interesting one there. What I would say as well is that BTC, Bitcoin, is up quite a lot. You see it just touched the recent highs just over the weekend, up at 122,000. And that could be just on the sort of the news, commentary coming out that in the 401k, which is the principal retirement sort of vehicle for many Americans, most Americans, the Trump administration seems to be moving towards having crypto being allowed to be part of that as sort of a diversification, which of course is a crypto positive in general. So we see BTC and Ethereum up. So just in general, animal spirits, we see stocks almost at highs, despite what might happen a little bit with NVIDIA and AMD, those export tariffs. But basically, we have ES and NASDAQ doing very well, global equity doing, in general, quite well in developed markets. We have risk-on spirits with Ethereum and BTC. We have the US dollar maybe sort of finding a basing formation here. So, animal spirits, let's see what happens. Not a huge amount of data today. No doubt there'll be some tweets from Trump, but really we'll have to wait and see on a sleepy Monday what happens tomorrow with the CPI number. I think that's going to give the direction of travel for markets, at least for the next sort of week or so. Okay, thanks guys. Have a great day, and we'll keep this going tomorrow. Thank you.